Kule nyanga sigubha iminyaka lengu-24 iningizimu Afrika yatfola inkululeko. Asikakhululeki nje kuphela kwetembusave, kepha-ke nawe unamalungelo lakuvikelako njengemthengi lafaka ekhatsi-ke i-National Consumer Protection Act kanye-ke ne-National Credit Act lengamele indlela lesemthethweni bosomabhizinisi lekumele basebenze ngayo kude ukuthi wena-ke njengemthengi ungacaphateki. One such consumer is Patrick Moletsane from Davidton, featured in our previous broadcast. Now, Patrick yena-ke utitfola abukele nesikweleti lesingetulu kwamandla akhe emva kokuthi isitolo semfurniture lesiside-ke simlethele timpahla ngaphandle kwenta licwaningo lokuthi utawukhona nokuthi bhadala pheceleti-ke i-affordability. Usitshela-ke kabanti ngale ndzaba-ke yababe Moletsane sine-producer yethu Buchule Puthini abeyilandzela-ke le ndzaba. Buchule, thank you so much for joining us, and asositshela kabanti ngale victory yababe Moletsane.
Manibulele kuwe Simphiwe. Ifamily yakwaMoletsane izibhaqe iphansi kwe-debt eninzi. Ityala elikhulu from ivenkile enkulu lapha eSouth Africa uLouis. Now uLouis-ke at once upon a time in 2015 bebe khangela abantu buvule account eDavidton. So le family lena yazibhaqa ithatha impahla amounta to 26,000 bengakwazi uyibhatala, and apho zange kube kuvavanyo bayakwazi na ukuyibhatala le mpahla.
Okay, so how did you get here? Bafika kanjani-ke kulelo?
Basibhalele utata Patrick usibhalele on our Facebook page apha @Yilungelo Lakho na ku Twitter. Usibhalele sichazela imbilini yakhe kuba kwenzeka ntoni na that umfazi wakhe akaphangeli, nazi impahla zikhona endlini, i-fridge, i-TV kunye ne-washing machine. Ngenyanga ubhatala into engaka nge-1,500 and akana contract, zange wasayina contract nale venkile lena. So ke ukubhaleleni kwakhe kuthi apha eshowini yethu ke siye saya kubo sanxulumelana nabo, emva koko sayibuza na ivenkile le sanxulumelana sibuza into yoba ithini imeko yale customer. Bayikhanyela ke loo nto leyo besithi into yoba bona banayo i-contract nale family, and that they had agreement even though i-case study le bisithi into yoba azange basayina nto.
Bayavuma ke pha ukuthi lama affordability assessments abazange bawenda?
No. They said at first in one of i-letter emails kwimbalelwano basinike zona into yoba babayenza affordability assessment, babavavanya into yoba bayakwazi uafforda na. But after the show kwenzekile ke into yokuba uLouis lo simbuze nathi into yoba i-proof ubungqina bokuba niyenzile nyani oluvavanyo na. So ke bathi abanokwazi usinika i-proof yaloo nto leyo, and then a day or two later after ishow yakule veki pheleyo bathethile nabantu bakwaMoletsane besithi into yoba bafuna uresolve le case. Lacinywa ityala, emva kokuba licinywa ityala ifamily yakwaMoletsane isazigcinela impahla zabo.
Oh, that's lovely. That's lovely. Awusiyabonga kakhulu. Siphinde sibonga kakhulu kuBuchule Puthini. As Yilungelo Lakho, we aim to serve the public. We aim to protect and advise consumers about their rights and responsibilities, and also advise on the recourse that they need to take. All right. Thank you so much for that, Buchule Puthini. In tough economic times like these, it's not uncommon to find every income earner nursing a headache around payday. This is largely due to unscrupulous lending practices that still leave some income earners with very little to take home. Financial authorities, among them the Reserve Bank, want to put an end to this state of affairs by making it very difficult for dodgy lenders to gain access to your money. And to find out more, or rather to find out how this will happen, we've got Team Masela, the head of National Payment System Department at the Reserve Bank, and payroll expert Aline Leggett from the South African Payroll Association. A very good afternoon to you too. Thank you so much for joining us.
Good afternoon.
I'm going to start with you. Can you take us through the difference between what is known as, deductions, payroll deductions that are voluntary and those that are compulsory?
So you have statutory deductions, which are legislated into law, which is things like your tax, your UIF. You also have deductions that happen that are contractual, which are medical, pension, those kind of things. And then you have voluntary deductions, which is where an employee has agreed that they're going to have a certain amount deducted from their salary for a specific purpose, which they want. So, for example, they might agree to have childcare. There's a creche on site, they might agree that that's going to come off their salary. Or you might have a situation where a company has entered into an agreement with a financial institution, for example, insurer, saying, we are offering our employees a better price. If you go through us, you can get a funeral policy, for example, at a lower rate, and we will then take it off your salary. So you have your statutory, your contractual, and then your voluntary deductions. And those are all processed through the payroll department.
Okay. Now, Tim, what's your understanding of the statutory and the voluntary payroll deductions, and how do fraudsters get access to our accounts or to our monies?
I share the explanation from Aline on the three categories. Indeed, the reforms that we are undertaking are part of a broader collections reforms. But to what she said, indeed, the statutory deductions, for example, tax, and there's other contractual deductions relating to pension, maybe medical aid, but then there's voluntary, as she indicated. From our perspective, we finding that the consumer out there is getting overextended, and now parties that are contracting with the consumer would like to rush to payroll to gain assurance that they will be able to collect. As Aline indicates, some of them then says, we are able to package a better product on condition that we can collect via payroll, and others are saying we can give you a loan at a lower interest if we are able to collect via payroll. But now this is talking to a broader problem where consumers are overextended, and now there's a rush to move from the banking system where there's debit orders to the payroll so that the parties can be first in the queue. And the reforms that we are undertaking at the moment is precisely to try and address these problems of exploitation and the fact that some of the consumers are actually not understanding what is happening, and we're trying to put the consumer first.
So what's your role then of the Reserve Bank between merchant and the client or the consumer?
Our role in the National Payment System Department of the bank is to look at the safety and efficiency of the payment system. Indeed, we don't have a mandate on consumer protection, but as you may be aware, the Financial Sector Conduct Authority was launched last week, Tuesday, which has got a mandate to look at the rights of the consumer, that is looking at the consumer be given the right information as well as the pricing issues that are happening there. Now, in our execution of the safety and efficiency mandate, we work with other sister regulators, like the consumer commissioners and the Financial Sector Conduct Authority. We're going to be working together to ensure that we clamp down on the abuse that is being perpetrated in the market.
Okay, so how then consumers do they protect themselves from scammers and fraudsters?
Well, I think this whole regulation around payroll deductions, this is, from my understanding, has all arisen as a result of emolument orders. Emolument orders are a massive, massive problem in any payroll department. They're a massive problem in any consumer's life. All right? They are as a result of somebody being over-indebted. They cannot meet their payments, and it's almost a given that they're going to have an emolument order against their salary. All right? Mm-hmm. Now, there's a vast difference between emolument orders and voluntary deductions. All right? An emolument order is something where a consumer has got themselves into this position where they've been over-indebted. And we go back to Tim and talking about how we regulate this. And a lot of those issues rise out from the fact that the NCA, so your National Credit Act, is not being followed or adhered to by the lender. All right. So if that was happening, we wouldn't have the emolument orders, we wouldn't have that many deductions going through payroll, and we wouldn't have a problem. Okay. All right. From a voluntary point of view, from a consumer point of view, you obviously have to manage your debt. You have to be aware of, but we live in a society where it's really, really hard to do that, where a lot of people just don't have that kind of income where they can go, oh, I'll pay this, or I'll settle everything. Okay. So it becomes problematic.
Yeah, it certainly does. Now, for now, let's take a short break. Our participation lines are now open. We'll be taking your calls and also reading your Facebook messages. But for now, let's continue with that discussion. Now, Tim, which law or which act do these fraudsters or scammers infringe in this whole transaction?
In fact, the starting point is that the bulk of the problem comes from the lending side, where the NCR, the National Credit Act, is supposed to be enforced. But unfortunately, there's other services that consumers access. For instance, when they access insurances, either it could be normal life insurances or funeral policies, or even getting a cell phone contract, there needs to be affordability checks. It's just that it is being emphasized when you take a loan, but for any service that you're taking, you need to be able to afford that service. So there needs to be affordability checks that are undertaken. And indeed, that's where the problem comes, that somebody takes some loans, they take a few policies, then they take a cell phone contract, then they take a gym membership. And if all the parties are not doing affordability checks, unfortunately, the consumer is going to be in trouble because they're going to be overextended. So now, I'm emphasizing the National Credit Act because it's dealing with credit, but I believe all parties should conduct affordability checks, and they need to be monitored to be doing that.
Okay, without departing from the subject at hand here, so who is at fault? Is it the lender or is it the irresponsibility of the consumer? By taking all credit without having assessed himself whether he or she can be able to afford?
I think, unfortunately, consumers have a consuming attitude, and they would take, for instance, there's mention that you could get a call to say you're being offered a loan or you've been offered a furniture that you need to buy because somebody said they checked that you can afford. I believe you have to also...
jump at that opportunity, yeah.
You also have to check that, do I indeed afford, before you actually go for it? Because then you go for it, and I think our consumers, unfortunately, when they told that it seems you can afford, they believe they can afford. But then that is irresponsible behavior coming from the service providers if they do not check that the consumer can indeed afford.
Right. Do you want to weigh in on that?
I think it's a very valid point. I think we tend to look at the lenders on their own and say, well, they should be adhering the National Credit Act and it's their responsibility. But it is also the responsibility of the consumer to say, I need to budget. I need to know what I've got. I need to know what I can spend. I also need to know what's coming, what's happening in the future. And when I talk about that, I'm talking about school fees are happening, school uniforms are happening. We don't budget for those things. And a lot of the time, if you look in payroll, and it's got a life cycle, but a lot of the time, halfway through the year, you start getting emolument orders that have come as a result of lending in the beginning of the year to pay for school fees and to pay for those kind of things. But I don't have the money to actually settle those debts. So we have to look at the consumer. But at the same time, we're looking at a large consumer base that does not have financial acumen. Nobody's ever shown anybody how to actually do a budget. How do you budget? So you get your payroll. How do you budget? What is involved in that little exercise? It's all very well to say budget, but if nobody's shown me how, I'm not going to be able to do that.
For sure.
And that's not fair.
So where is the gap in the transaction that fraudsters or scammers take advantage of?
Well, I think historically the gap has always been in the emolument order system. If you go back to the ruling that was made by Judge Desai in 2015, where he ruled that a whole lot of emolument orders were actually illegal. What that comes to is the fact that when you're doing that, when you're signing an agreement, and this is also a consumer issue, when you go and you open an account or you sign a loan agreement, read the fine print, read what they're telling you. Because what these guys are doing is they're saying, I hereby consent to judgment, which basically says, I'm throwing away my right to object to anything you ever do. You can basically, as soon as I default, you can go and get an emolument order against me. As soon as I default. So I can't explain to you why it happened. I can't go and say, oh, but I can settle it. The judgment is made. And suddenly I have a deduction of my salary that I hadn't planned on having. And that is then causing the problem that Tim is pointing to. So when the salary hits your account, it's much less than even if the guys had gone through the National Credit Act and they've done an affordability test. Now I've suddenly got an emolument order or two coming with my salary first. So no, I actually don't have that much money going to my bank account anymore.
Right.
So we have to differentiate between the emolument orders and voluntary deductions because they are not the same thing. A voluntary deduction is something that I've opted for as my employer to make that deduction. An emolument order is a statutory ruling. It's a court ruling. So there is a difference.
Sure.
And I think the lenders are playing on that. And they know that as soon as an emolument order is issued, they will get their money.
Right,
it's done
right.
because it's a court ruling.
And Tim, how do consumers protect ourselves?
Well, I think the consumer is vulnerable, and that's why the regulators are trying to put measures in place. But sometimes we're told that we're going too much and we're taking the rights of the consumer. But I mean, when we talk to these issues relating to the emolument orders, we're also working with the Department of Justice to say, in enforcing these, I mean, parties become reckless when they lend, and then they get the court to order that they can collect via payroll. And indeed, I mean, it's not in the interest of the consumer. So the consumer, unfortunately, just have to open their eyes to what they're committing to. But to some extent, they need the regulators to take a strong role in order to try and protect them.
And who bears the honors of protecting the consumers? Surely there must be someone, somewhere, who can raise that red flag that this is about to get really nasty.
Well, from our side, as I had indicated, we're looking at the broader reform of the collection system. I'll give you examples. For instance, even moving away from payroll deductions to say, debit orders that happen through accounts. Some of the consumers, and probably you and I could have experienced that, where there was a debit on your statement that you don't know. But then there's consumers that never check a statement. So if there was such a debit, it would have gone off, and it could have been rogue. They wouldn't have been aware, and their money would be gone. So now, there's reforms that are underway that, if we have time, I could touch on as to what is happening in terms of reforms of the debit order system.
Okay.
To ensure that even the debit orders that happen after the money reaches the account, there's elements of tightening up such that we can protect the consumer better.
All right. Asasiye-ke lapha eNorthwest kuna Leah. Siyakubona ehlweni Leah, sawubona. Leah, are you on the line? All right. Asibambe lapho ekwanyalo mbukeli, siyabuya emva kwaleli khefu. We would like to hear your thoughts on this proposal. Our participation lines are now open. You can also send your comments on the proposals to the Reserve Bank before the 30th of April. The email address is on your screens right now. All right, let's take a look at some of the Facebook messages that have been coming through this hour. Teresh, so Utsi, we are the victims of debits. Can we please be protected? Lucas says, I think the mistake comes from this company who keeps on offering us money over the phone and so on without checking if we qualified or not. And Tereso again says, our salaries are no longer safe. We live in fear of our money. Something must be done. Unnecessary deductions leave us poor. Tereso is from Hebron. Do you want to weigh in on this Facebook message? I guess the underlying message is the protection of their salaries and who bears the honors of protecting them.
Need to be protected, absolutely. But you'll find that if you look over the last, I don't know, 15, 20 years, companies used to do a lot of deductions and companies used to pay people's bonds, companies used to pay people's electricity accounts. Those days are gone. Those days really are gone. That does not happen on payrolls for the most part anymore, okay? Payrolls really concentrate on your statutory deductions, your contractual deductions, and occasionally voluntary deductions. But those voluntary deductions are run normally through the payroll in terms of something that works for the employees. I think what's really important to understand is when you look at the proposal that was made by the Reserve Bank, they talk about an option where payroll can do no deductions, except statutory ones. And I think there's got to be a balance here, because when you look at a corporate, when you look at an employer, retention of skills and retention of talent is massive, all right? They are always vying for what do we offer our staff? How can we reward our staff? What benefits can we offer them? So when you're looking for an employer and you're going, okay, where do I want to work? I might have some criteria. I might want to say, I'd like to have somebody who's got a creche. I'd like to somebody who's got a gym. There are things that I, as an employee, might be looking for. But that means that if I put my kid in the creche, there's going to be a deduction coming from my salary. Okay. I've opted for that as an employee. It's what I've looked for, and I'm prepared to pay that. Or I want to join the gym at work because it's going to be more convenient, it's close, cheaper, I can go at lunchtime, whatever, okay? But it's going to be a deduction off my payroll. So you have to look at those kind of deductions and say, are those, they're part and parcel of my package. They're what drew me to the company in the first place. You can't have somebody coming along now and saying, oh, well, sorry, none of those are now viable. We can't take those through, you can't deduct those off your payroll anymore. I think what we need to definitely identify is what voluntary deductions are we talking about here, all right? So we're talking about your insurance company, who, like Tim said, you now suddenly have 5 or 6 or 7 funeral policies. I think for the vast majority of companies, that doesn't actually happen anymore. It doesn't go through the payroll. I have no doubt that you have some payrolls who are still running a lot of deductions through for their staff. But for the most part, it doesn't. Payroll have been asking for years to have a cap on deductions so that we can say, the law says. If you go back to the early 2000s, government actually changed the Public Finance Management Act in this country to say that there was a cap of 40% on deductions, which made perfect sense. But it was limited only to government employees.
But then is there a link between multiple payroll deductions and vulnerability to being scammed?
Well, yes, there is. I think if you need to protect your employees by not allowing that to happen. So I'm not going to enter into agreement with a company that goes, yeah, we're gonna have funeral policies and sign up for as many as you want. You're going to say, look, you can have a funeral policy, but you can have 1. Or you can have 2. Okay, so let's be realistic about it. I will deduct a maximum of 1 loan off of your account. That's fair. I'm not going to end up taking off 4 or 5 or 6 or 7 loans. That's not going to. And for the most part, I have to say, loans don't go through payrolls anymore. They really don't. They end up being the emolument order as opposed to the loan. And I think that's also a discrepancy or a misunderstanding that some people might have. Payroll is not actually deducting the loan from your salary. We are deducting an emolument order, which has been issued by a court. All right. Okay. So I'm not, and I can't not do it. As a payroll department, I'm legally obliged to recover that emolument order. Okay. Whether that emolument order is valid, legal, all of that is a completely different story, because there's a good chance it might not be. But that's a different thing that needs to be dealt with. Okay. But payroll has a responsibility. The employer has a responsibility. You cannot open your payroll to a wide array of lenders who are now going, I want to get my money back. Okay. It would just be a nightmare more than anything else.
All right. Now, Tim, before we get to the reforms, do you want to comment on the Facebook messages?
Yes. I think in terms of just adding on the conversation as well, we believe that the consumer out there needs insurance, and indeed they need to have access to it. And they need credit, but in credit we try and say they need productive credit. That is credit that is building wealth, or perhaps gives them a roof over their head and all that. Those are genuine and given. But now you find that because of approaches from all sides, they being approached and they take some of this credit that is not necessarily productive, or they take more cover than they require. But then, talking to the Facebook messages there, it's more relating to debits, whether within payroll or outside. And in this regard, I will just mention, I hope I'll be quick, 3 things. The first cycle of reforms came in 2006. At the time, the NCR was coming into being the National Credit Regulator. But at the time, there was a practice where some of the lenders were retaining card and PIN. They were giving you a loan, and they take your ID, they take your card, they take the PIN. Every month, you must go and fetch it and return it. So that end of the month, they take their money. So reforms were implemented in what we call the early debit order system, and it is in place, but it's undergoing reforms at the moment. And now, the first issue there was that, and it still is that when you take a loan, the organization giving you a loan approach their bank to fetch the money from your account. We believe it's problematic. That's what we're trying to reform, because we want, when you take a loan, the mandate to collect the money to be sitting with your bank given by you. It's not given by the company to go and fetch the money, but it's you saying, I've taken this loan and I want you, my bank, to pay it on the 25th. When you receive the debit, please honor it. So now what has happened subsequent to the reforms of 2006 is that we have implemented a debit order abuse system, where indeed there's some rogue users who go and try and debit your account if they know the details without a mandate that we have given. And now, there's a process that if you spot such a debit, the money must be returned to you. But out of 100 people, if they take their chance, it could be that only 50% will dispute. The other 50, they will go away with murder.
Right.
So now, we're trying to strengthen the system such that the power should lie with you and your bank rather than the bank of the collecting party and their bank.
All
But these are reforms, and I can indicate where we are. It's a process.
Okay, all right. Now let's take yet another short break. We'll be right back. Remember, you can send your comments on the proposals to the Reserve Bank before the 30th of April. The email address is on your screens. And if you want to talk directly to our guests, you can also call us right here, right now in studio, using the numbers on your screens right now. Speaking of which, let's go to Babatun. We have an anonymous caller. Sagomela ehlelweni sawubona.
Yebo kunjani baba?
Siyaphila kunjani ba?
Hayi noku right.
Siphilile. Khuluma nathi baba.
Yeah, ngibe la ngine problem ngareprintwa 20 ngaba ne loan in African Bank ne.
Okay.
It was 29 ne. Then 2011 ngaretrenchwa ne. Ngawasendela amaphepha wonke. Babuye wa 2012 ne bachubeka ba deducta imali yami. And kumanje badinga ibhadale leyo mali leyo still angisebenzi but lokuba lokuba phase bathi mina ngilo ngiqhubeke ngibhadale leyo then amaphepha wonke retrenchment ngabasendela so angazi ukuthi kufanele ngenze kanjani lapho.
Uthi awuyithathe phela imali ngoba phela usasebenze wa retrench abathini?
Nami mangabe ngibatshela lokho ukuthi angisasebenzi then bangitshela ukuthi okay right umthetho uthi kufanele ngibhadale. Otherwise bayongifaka kumaloya uyabona every month nginokuzama ukuthi okay right ubhuti wami angibhadalele leyo 100 rand leyo uyabona ngibathi ngibhadale bona and banokumthumelela ama-statement okay right already sebangifakile kumaloya manje banokumthumelela ama-statement kuthi okay right ngiyakoloda into efana leyo uyabona.
Okay, siyabonga kakhulu kushayela sathemba ke into ethi taxida. So basically what he's saying is that he took a loan with African Bank in 2009 and then in 2011 he was retrenched and they're still deducting because they've even handed him over to the lawyers to pay up. So how would you advise him in that regard?
Unfortunately, he does have a problem. He's signed a contract with African Bank, he's got a loan, he's taken the money and now he's not in a position to pay it back. The recourse that they have, as any lenders have, is to take him to court and to try and get their money. They will keep trying his bank account. They will try every time money hits his bank account, they're going to take it. And it's not an African Bank thing. It's anybody who you've lent money from. They're going to keep hitting your bank account with those. And that debt. So the reality is.
So there's no consideration of the economic status?
There is a consideration to a point. There's something called a prescription, okay, a prescription of debt. So after 3 years, if your debt has not been dealt with, activated, paid, acknowledged in any form by you, that debt actually becomes prescribed and the company writes it off. One of the things that I think people need to be very, very careful of is that when you're dealing with a big organization, they actually apply that prescription of debt. So after 3 years, they write off your debt. The problem comes in that they then sell that loan book to a third party, which is a debt collector. And I think, so if you look from a payroll point of view, when you get your emolument orders, a lot of those emolument orders are from debt collectors, some of them quite unscrupulous, where they have bought loan book for debt that has actually been prescribed, they then phone you 5 years down the line and go, you owe X money. And you go, yeah, no, I don't remember it. But the tactics that are used by these guys are bullying, they're threatening, we will come and we will take everything you own, and so they scare a lot of the consumers into signing something acknowledging that they owe that money. And as soon as they do that, that prescription period of 3 years falls away. So I think people have to be aware of that, the fact that after 3 years, think very carefully whether you sign a document or acknowledge that you owe money in any form. Do your work first, do your homework, check out what's happening before you do that. Because as soon as you acknowledge it, and I'm not saying to people leave your debt for 3 years, that's just not cool.
Right.
But if something's happened and you've been retrenched, look at the big picture. Get advice. Go to a legal aid. Go to a legal wise. Go to somebody who can help you rather than just going, I don't actually know what to do. Because by throwing your hand, and unfortunately that happens, people throw their hands up in the air and they go, I don't know what to do, so I just won't. I'll ignore it and hope it goes away. It doesn't go away.
Okay.
Right? So go and find somebody who can help you, who can assist you in some way to resolve the problem and get it sorted out. Don't just leave it.
Okay, so Tim, in the cases where a loan is not insured, so what sort of recourse is at the consumer's disposal?
Yeah. In this specific case, my advice would be that, it's a general advice, of course, that for anybody that finds themselves in a situation similar to this, the first thing that you do once you are retrenched is to approach your creditors and go and try and make an arrangement that suits both parties.
Okay.
It should suit the creditor, but it should also suit you. Okay. You make that arrangement, let's say, I don't know whether it would be suspension of a debt and you'll repay it at a point that you agree or whatever arrangement.
Okay.
But you may find that, like Aline is saying, maybe the creditor is going to be bullying you. In this case, the creditor being a bank, I would have advised the caller to try and make the arrangements. If the creditor is unreasonable, they approach the banking ombud with their case to say, it's not that I'm not willing to pay. My circumstances are such that I can't. And I'm willing to enter into arrangements that could suit both of us. But I find my lender to be unreasonable and present their case. And in most instances, I would believe the ombud will be able to intervene. I'm not sure, perhaps even the colleagues from the National Credit Regulator could also intervene so that there's an arrangement that is reached that would also accommodate the circumstances of the caller or the consumer.
What if the debt has then been handed over to a third party, like the debt collector, because there's no arrangement between those two?
Yeah, I would believe that probably it would be handed over after a while. It can't just be immediate. So in case I'm retrenched and I immediately contact my creditors, surely they should still be having the arrangement or be willing to entertain an arrangement for me to make arrangements. They cannot just hand it over immediately, because even in their lending arrangements, there's accommodation for these kind of cases, and they should be able to accommodate the consumer.
Okay. All right, let's go umtata now. We've got an anonymous caller. Sagumukela ehlelweni sawubona.
Hello, kunjani?
Siphilile kunjani baba?
Siyaphila nathi. Anonymous apha eMthatha.
Okay. Siyabonga, khuluma nathi baba.
Yes, mna ingxaki yami ngathi mna ndandifundisa nge-loan ke-NSFAS ne. But ngoku into enzekayo kule loan ka-NSFAS ndafumana umsebenzi kwi-retail store ne. Then ke ekufumane kwam umsebenzi kwi-retail store bandikhangela bandifumana ukuthi mandithi payback kule mali ka-NSFAS. But now ngoku into enzekayo it's not that enough for uba ndingakwazi ukuyibhatala back, but ke banegotiata nam into yobana bathi bazodeducta imali ethile ne.
Okay.
Imali yayiphushini imali ethile so that but ngoku ibonakala uba ngathi afford kakuhle for ilaa nto so bengicela ukubuza into yobana if ever ingakwazi nami unga-accommodate le nkqubo yanamhlanje mhlawumbi incedise loo nkqubo yanamhlanje.
Did you actually make that arrangement? Navumelana nabo ukuthi batak-deducta a certain amount of money?
Yes, because babendithreatenisa into yobana mhlawumbi bazondisa emagqwetheni if ever ndibhatali into ezinjalo bazondivalela kwiinto ezininzi if ever ndifuna umsebenzi bazathi into yobana andizukwazi mna ndinetyala no-NSFAS mhlawumbi.
Okay, so what's your issue now? You can't afford to pay it, or is it too much?
I can't afford to pay.
Okay.
Yes.
All right. Siyabonga kakhulu kusishayela siyathemba ke thina into tasita ke. All right. Well, I guess I was on standby to to tackle that issue from our anonymous caller from our Eastern Cape. But for now, let's take our final commercial break. We'll be right back. If you want to comment on the proposals, you can email the Reserve Bank before the 30th of April. The email address is on your screens right now. Before we enter that break, we had an anonymous caller from the Eastern Cape who was basically saying that he took up a loan with NSFAS and he got employed at a retail company. But then NSFAS tracked him down and they've imposed that he should pay back. And the money that they're demanding from him, he can't afford. So what's their recourse?
I think the reality is that talk about it. Don't just not pay it. So approach NSFAS and say to them, this is my budget. This is what I spend my money on every month. This is how much I can afford. I think if you go to them with the facts and the figures and say to them, this is what I can pay you. I'll never be able to pay you what you want, but I can afford this. I think that people need to make concessions.
Yeah.
We are all, not all, we are over indebted. We're an over indebted society, and you're not going to get your money. What's going to happen is that's going to end up coming as a deduction through the payroll at some stage if you don't settle it. So the debt is not going to go away. I think that's the fundamental issue here. The debt is not going to go away. If you've got yourself into debt, they want their money. They're going to get it one way or the other. So don't play like ostrich. Don't put your head in the sand. Approach them. See what you can do. See how you can solve the problem.
Indeed, indeed. How do you advise them, Tim?
Yeah, indeed, I would support indeed the fact that they should approach the organization, even if they had promised that they can afford that amount, but their circumstances are such that they cannot afford anymore. They should go back and still put the facts on the table for a proposal of what they believe they can afford. Because if they do that, and perhaps it ends up in a dispute and it needs to be arbitrated, their case would be found to be at least making sense, and arbitration could actually assist.
Okay. All right, we've got some more messages. Let's now take a look at some of them. Nokala Utsi, people who experience these dodgy deductions are the authors of these issues. Ayanda Utsi, commercial banks must always be the mediator between company that will debit in my account and I. There must be an agreement between the three of us. We must sign down that we are aware of particular debt. No bogus debit must just fool around my bank account. Well, and Kia Minga says some of the bank deductions on a statement you will see have been named fee. Fee for what? No explanation whatsoever. All right. Do you want to comment on these?
Yeah, I'll take them from the last one up, if you allow me. The one from Kia relating to fees. I just want to mention that deductions that happen on your account should have details such that if you raise it with your bank, they are able to trace who actually put that deduction through. For instance, the industry has put what we call an abbreviated short name, and I think it's 4 characters. It stands for the organization that is deducting. So if you approach your bank and saying, there's this debit, I don't know it, and they use the abbreviated short name, they should get who is actually deducting. But to the comment that was on the screen, it says fee, fee, fee. Perhaps it was the fee from the bank that was going off the account, I don't know.
Or the admin fees, perhaps?
Yes, or account management fee, or ATM withdrawal fee, I don't know. It could be fees for whatever, but still, they should still raise it with their bank and get a good explanation of what that is for, because it's their right.
All right.
Then going to this, on the second one, I think it was talking to the fact that there should be an agreement between the consumer, their bank, and the collecting company. Indeed, and that's why I'm saying reforms should be such that we strengthen where the money is going to be collected rather than who is going to be fetching the money. Okay. So these reforms would probably address what the Facebook person was trying to ask.
Okay, all right. Arlene, do you want to comment on this?
I just think part of it is that be aware of what's happening in your bank account. Know what's happening, know what your bank is going to take off, and don't, too many people don't look at their bank accounts. They have no idea what's actually happening. So that deduction will happen for a month, 2 months, 3 months, and then suddenly they go, oh, I don't know what that is. Let's go to the bank and find out. Your money's long gone. You need to approach it straight away. But the banks now offer things like warnings on your cell phone that come through and say, opt for those services. So that as soon as the money comes out of your bank account, and don't go, oh, anything over 500 Rand, any money that goes out of my bank account, I want to know about it. You'll find a lot of the deductions, and there have been issues around deductions going off of 99 Rand. And that's because so many people have a 100 Rand limit. So as soon as more than 100 Rand goes off my account, I want to sell an SMS from the bank. So these guys put through a 99 Rand figure. You don't know about it. And you really don't know about it until you go and print out a statement and go, oh, what's that? I don't recognize that. Okay. It's too late then.
So is there a way of recovering money stolen in this particular way?
Yes, I think we have an arrangement at the moment as part of the debit order abuse management that if there's a debit on your account and you spot it and report it within 40 days. This is the current rules, but they've been changed because we need to actually take more action to protect the consumer. If you query it within 40 days, the money should be returned to you immediately without any question asked, while the bank is verifying whether the debit was genuine or not. Unfortunately, it's got consequences as well. Because if I had a valid insurance debit order and I run out of cash and I dispute it and I'm given the money back and something happens, then I'm not covered. Let's say I've been paying insurance for 5 years and suddenly I did that and I got the money back, then something happens, it's a car, it knocks, then I'm not covered, it's devastating. Or it was a life policy, something happens, then for the whole period that I was paying, I'm not covered. It's bad. But then if it's more than 40 days that you query, the money might not be returned immediately. The investigation happens first before the money is returned. But if it's within 40 days, the money has to be returned without you being charged anything immediately. Unfortunately, it's still an inconvenience because you still had to query and get your money back. It shouldn't have happened. And that's why, as I indicate, we would like to tighten such that it is you giving your bank authority rather than the collector giving their bank an instruction to come and fetch money from you.
Okay. And I guess the underlying message is that consumers should always check their statements. Consumers should always check their affordability before they fall prey to those unscrupulous insurance people or the sales people on the phone. So what sort of advice do you have for consumers right now?
I think the main thing is be aware. Be aware of what's going on around you. You have to be careful of those kind of things. Yeah. You don't need 9 insurance policies for funerals. You just don't need those kind of things. Right. Don't be bullied into signing stuff that you don't want. Think about something before you sign it. You have a cooling off period for a lot of things. So where you feel like you have been bullied into something, or you feel like you've signed something under duress, you can go back and say, no, I'm not happy with that. Mm-hmm. A lot of these things do have cooling off periods. So remember that. Know that you can go back the next day and say, I actually don't want that. I actually don't want that. I agreed to it. And they're going to say, oh, but you signed it. That's okay. I'm allowed to say no. I'm allowed to change my mind and say no.
Even after you've signed?
Yeah.
Okay.
Okay, so read the document. Don't just sign them. Read the fine print. Yeah. It's hard, I know, but read it. Because if you don't read it, that's how you get yourself into trouble.
Right. All right, Tim, as a final parting shots before we wrap the show?
Yes. Indeed, to add on what you said for consumers, I believe that the consumers should also prioritize on the most important things that they need. Because if you find that you overextend yourself and you have many debits that are exceeding your salary, for instance, those that you did not prioritize may go through, and those that you had prioritized may be the ones that don't go through.
Okay.
We were wanting to propose that in this collection space, consumers should prioritize which should be paid first.
Sure.
But we were warned to say it may have unintended consequences, because when a consumer is in trouble and they approach a lender, they will say, put me first. And the consumer will keep on changing the queue. And indeed, that doesn't work as well. So at the moment, there's an element of randomization of debits in order to get the lenders to be aware that they can be first one day and they can be last another day.
All right, Tim and Aline, thank you so much for joining us. We appreciate your time.
Thank you very much.
Kuthiwa ke lokungapheli kuyahlola ke nathi ke ngalunjalo sesifikile emaphethelweni eluhlelo lwethu. I would like to thank our guests for their invaluable insights, and many thanks to you too, the viewers, for sharing, for staying with us throughout the show. You can also catch a repeat of this show on Thursday at 10 p.m. Our previous shows are also available on YouTube. Otherwise, we'll be back at the same time, same channel next week Monday. From Miss Impio Ngongane and the rest of the team, stay blessed. Cheers.
Yilungelo